Last week, the government imposed a partial lockdown on 13 counties within the Western and the Lake Basin, all right, in the region, in a bid to contain the surging numbers of COVID-19 cases. The Ministry of Health met the decision after declaring the region a COVID-19 hotspot zone. Consequently, a 7 p.m. to 4 a.m. curfew was imposed in the counties of Kisumu, Busia, Vihiga, Kisii, Nyamira, Kakamega, Kericho, Bomet, Bungoma, Trans Nzoia, Kisumu, Siaya, Homa Bay, and Migori in the last 14 days before the closure of infections in those counties constituted 60% of the national case load, with an average positivity rate of 21% against the national average of 9%. Additional measures put in place included the restriction of movement for non-essential workers between the hotspot zone, suspension of weekly non-food and livestock markets for 30 days, suspension of all public gatherings and in-person meetings as funerals and interment ceremonies are to be conducted within 72 hours of confirmation of death. Night vigils and overnight processions were prohibited, while funeral and wedding attendees are not to exceed 50 and 30 persons respectively. Religious services were also suspended for 30 days, as hospital visitors will also be limited to one visitor per patient at a time. Good. Now, those are the new ones. Now, Gabriel, let's talk about how critical these western counties are in terms of contribution to Kenya's economy. I mean, because when we're talking about these new measures, how do we look at them in consolidation with the general basket of the GDP of the country?
So I'll respond to the question in two ways.
Yes.
One is we have quite a bit of population in those mentioned counties. So, of course, we're talking about affecting a lot of consumer goods that go in and out of that region. Because if you look at the western counties and then you add, of course, Nyanza region and part of Rift Valley, we're talking about very densely populated areas. So in terms of consumer goods going into that region from manufacturing and distribution centers in Mombasa and Nairobi, that is going to be affected. Number two, we're talking about a very key transport corridor for this country, linking us with Uganda and other neighbors. So affecting and blocking movement into those, of course, affects our trade and relations with those other countries. So this, of course, has a significant impact as far as, moving consumer goods, as well as government services going to those regions. Of course, government does not restrict its own employees, but those regions do take quite a bit of service from Nairobi,
yes,
as well as goods, as I mentioned, from Mombasa because of that big consumer base. So again, based on the consumer base and a lot of the agricultural activity in that sector, they do contribute quite a bit to the economy and to the food basket of this country. So, of course, we have reason to be concerned. And, of course, we know from where these cases started spiking, we know what caused it. We all know it very well. So it's very unfortunate that this might repeat itself in other regions if the same habit continues down the line. So, yes, I would say those regions that have been carved out do contribute quite a bit,
yes,
in terms of even consumer demand. So then I'm expecting to see distribution companies, as well as manufacturers based outside that region be affected quite a bit, especially, and then remember again, that's the sugar region. So that's where a lot of our local sugar comes from. So if that is disrupted again, we might see an impact on this other side of Nairobi.
Pretty much. Gabriel, just before I bring Arnold in, I mean, do you anticipate, I like the importance that you've underscored for this county's contribution to Kenya's economy. Is that enough for us to go back and say, wow, with the numbers you're anticipating to rebound with this year, you got to revise them, because because you've locked down then those western counties that contribute heavily to your GDP?
The problem is the government has a target. I'll put it to you that the government has a target growth they have to hit this year, and it's a fixed number.
Yes.
How they achieve that is not linked to the real economy. So this does not affect the numbers. The numbers are based on creative artwork So it's not linked to performance of the real economy. That's how I'll respond to that.
Yes. Is somebody going to put you to task? Because some of these counties are very heavy when it comes to the agricultural activities that we do have in the country. Well, we do know that agriculture has been essentially the biggest contributor to our GDP. Is somebody going to say, yes, you got to revise it then by a couple of numbers if you're actually going to say, well, curfew at 7 p.m.?
Yes, for sure. I mean, in terms of talking the real numbers, definitely we have to keep revising these numbers because the sectors we expected to pick up, you're now affecting a whole region of them.
Yes.
So this has a direct impact to, of course, the numbers that had been put forward by any real economist out there. So anyone must take at least another hit because if and you know the problem with these restrictions, they're not properly time bound.
Yes.
So you can't tell how far long they'll go. And then we're still in the COVID period across the country. So numbers throughout the year will have to keep going up and down. But for this specific event, I expect it to reduce, of course, the growth that was expected.
Pretty much. Arnold, let me also get your sentiments on that as well. Do you share the same sort of thinking with Gabriel that, well, they're quite important, but then when it comes to that GDP growth, well, the government has to find ways of hitting it, whether they involve them or not?
Yeah, I think first to mention, I think the most dangerous point when you have a pandemic is when there's a plateau. So yes. I think whatever happened in those regions happened when there was a feeling that there was a plateau and the projection was that the cases of COVID-19 would go down. Because the biggest assumption was that the hotspots for COVID-19 were the major urban centers like Nairobi, Mombasa, and to some extent Kisumu. So that assumption is what led to where we are right now because there was a lot of relaxation as far as movement, as far as measures to contain COVID-19 are concerned. So unfortunately, when you relax and then you have a situation whereby you relax the measures, it makes you prone to having a new set of infections. And maybe just economically speaking, I think what Gabriel has alluded to, maybe just to add on, you're looking at a region which provides a huge chunk of maize, of consumer goods, of maize, sorghum, millet, and this, of course, translates to subsistence farming and also farming for purposes of cash crops. So that is definitely going to be affected. If you look at the entities which get these items, the Unga Limiteds, the likes of EABL who get a significant chunk of their inputs from that particular region, they're definitely going to take a hit.
Pretty much.
So it's necessary short term to take the hit. It's necessary short term to take the hit, but in the long term, we will need to do several readjustments from time to time.
Pretty much. Now, Arnold, still sticking to you, the Capital Markets Authority now says Cyton Investments is not licensed and is not approved. In a statement Thursday last week, the authority said it was responding to inquiries regarding the licensing status of the Cyton Investments Group. Now, this follows complaints from investors on with a section of media users claiming they were duped by the Cyton Investment Fund, that is the high yield fund. Now, CMS says it has opened criminal investigations into the operations of Cyton and asked affected investors to report any fraud cases with the Capital Markets Fraud Investigations Unit, while cautioning Kenyans against investing through unlicensed and unapproved entities. However, the authority has confirmed the Cyton Asset Management Limited is licensed by to manage Cyton Money Market Fund, Cyton Balance Fund, Cyton Equity Fund, Cyton Africa Financial Services Fund, Cyton Money Market Fund, and Cyton High Yield Fund. Let's go back to that and see exactly what they're saying this morning. Now, they're saying that some of the money that has been locked in the Cyton Investment Fund is upwards of 13.5 billion, and now they're asking Cyton to pay back these monies, and they're saying that the regulator does not regulate the two funds that have this amount of money locked. All right, they're saying that marketing funds as a private placement fund and does not fall under CMA, but CMA has the authority and the law to look into funds that Kenyans are investing into. Gabriel. Let me start with Arnold this morning, Gabriel. So we get that done and dusted. Arnold, it's not the very first time we hear Kenyans get duped into funds that are not essentially legitimate. Arnold, let's address that issue. Before you put your money somewhere, what is the first thing that should tick?
Yeah, thank you. I think for us, we keep on seeing such issues because of the numbers that are pegged to the return on investments.
Yes.
Whenever someone is giving you more than usual, more extraordinary ROI, there's definitely questions which need to be asked.
Yes.
So if you look at what Saiton were the proposition which Saiton were giving in the market, it was north of about 18% per annum.
Yes.
If someone is playing along those lines, you definitely have questions to ask. The average yield, I think Gabriel will shed more light on it when he tackles this query.
Yes.
The average yield would probably be between 10 to 12% per annum. That's a good yield on any investment that you would make. If you're talking about 18, 24, 30% ROI, there's definitely a problem. And then if you look at the model in which Saiton have used, it's been flawed for quite some time because they essentially have their business is divided into two. So they have one wing which is essentially mobilizes the funds, and then the other wing is supposed to be investing. And they have a very huge concentration risk on real estate investments, and it's a query which the Capital Markets Authority has raised from time to time. You have 15 billion, you've mobilized 15 billion worth of placements, and then you have 13 billion placed in real estate investments in a market which is really not flipping those real estate investment quick enough.
Yes.
So it was bound to bring in problems even on face value, because had they diversified those placements, they would probably be in a position to assist the investors, at least a fraction of the investors. But if you look at 13 billion locked in real estate investments, they are locked. And even if you look at how those placements are made, they have too many what you would call SPVs, too many SPVs to manage those funds.
Yes.
So you get lost in all those SPVs, in all those explanations, and you see at the end of the day, they use the CMA license to say that, you know what, we're licensed by the CMA, you can trust us with your money. So when it reaches the point whereby they need to now pay back the investors, it becomes a problem. We've been through a COVID-19 year, we are still in COVID-19. COVID-19 was not a passing cloud. So things have been jammed, particularly because of that. A flawed investment plan, a flawed business model, and also COVID-19. So whenever the deal is too sweet, the proverbial deal is too sweet, then you may need to think twice.
That's it. Arnold, I'm going to come back to you on that as well. Let me go back to Gabriel. Gabriel, I mean, what do you need to do? I mean, because they were promising 14% return. So how do you start to check for certification and regulation by CMA? Because it should begin from there. And Gabriel, I should ask you this question as well. Should you also know where your money is going into so that you can judge as an investor your potential return on investment? Whether if somebody is promising you that I'm going to give you this, so you're able to judge, they're putting the money here, this is the specific sector they're putting it into, and this is how the sector is performing before you give somebody your money. Should it start from there?
Well, I've had interactions with both the CMA and Saiton in my career.
Yes.
Okay, so first to respond to the aspect of some funds being regulated and others not being regulated, it's as simple as asking, yeah. And someone cannot lie, because then you can ask for a certificate.
Yes.
It's as simple as that. And I've personally reported quite a number to the CMA that are operating. The CMA was not going after them, and I did not go looking for them. I just saw them online and realized this fund is just conning people. I put it in email, sent it to CMA, and then they act. So it's also lazy from the CMA that they were not acting on these ones before,
yes.
Or that they were not putting these disclaimers before. I think the proactiveness should come from the CMA to look out of who is out there, and then put a disclaimer on who is not regulated by them. and even be more proactive in terms of investigations and going after funds before anyone complains. That's one, and I'm talking about all the general funds. I know CMA keeps saying these are the ones we've regulated, but it's time they actually go online, do Google searches, attend these meetings, as potential investors, and then find out those who are misrepresenting prospectors to investors. That's
Yes.
one, as far as CMA is concerned. Two, as far as Cyton is concerned, I think Cyton has been very clear. If you've ever sat with any of the salespeople, they do break down which fund is regulated, which one is not regulated. Now, if you go to a meeting with Cyton, the first thing you realize is that you actually need an investment advisor because it can get quite confusing pretty fast. So I would at first beg the investors to have just spoken to someone even on phone quickly. They would understand the ones that are regulated and they would understand the ones that are not regulated. Now, one thing that investors need to understand and accept is that investments and businesses collapse. You're not immune from that as an investor. We've seen this morning Kaluworks collapsed. How many companies do we know of that have collapsed and have been put in receivership by banks, etc.? So that's one. Businesses models fail. That's number one. As an investor, that's something you have to be ready for, especially when you're chasing high yields, as Arnold has mentioned. That's number one. Number two, Cyton is right in saying that we have illiquid assets. They're right in that. But we do fault them for knowing this very well, that they're investing in a real estate sector which is very illiquid, but they're promising liquidity to the investors. You're telling me after 1 year I can get my money. That is promising liquidity.
Yes.
It means you have to hold money available for investors at that point of immaturity. But that is not the case because of your real estate investments. So first of all, they misrepresented, of course, the performance and the mismatch in their funds. And this is what analysts have been picking since 2017. This is something we have pointed out repeatedly since 2017. I have personally seen the investments. They're not bad investments. But you see now the problem is you promise something to investors and they made a decision on that basis. It does not matter whether you actually have the land or the asset. As long as you cannot deliver on what you signed on to, you have misled the investors. Is it case for fraud investigations? I doubt it meets merit for that because they can actually show the balance sheet for it. But the problem is the investors are going to be stuck in that position. And unfortunately, there is no way to unlock this for some of the investors. What Cyton should be thinking about right now, if I was them, is registering putting all these assets under a real estate investment trust and listing it on the market so that other people can buy the shares from the investors who've actually put in the money.
Yes.
They just need to unlock the liquidity part, but the CMA should come out clear and stop jumping up and in and out on this because they have been on this matter 2 years, 3 years ago. It's not right that such a diligent authority, which we hold in high esteem, would actually be reacting to, public videos and etc. It's such a serious authority. They knew what they were doing. They knew who is regulated. They knew which one is not regulated, and they'd already put it out there. So there's no need for them to, react to public outcry. It just makes them look reactive and not proactive. It's like they didn't know what they were doing.
Yes.
And that they are very serious people at CMA.
Pretty much. All right, Arnold, just in 45 seconds, because we are actually supposed to wrap up and get out of the studio this morning. So, when you see these headlines, Arnold, going around the economy about how investors are losing their money to dubious investment funds, over the other side, you also have CMA that says, that one is not regulated, so we can't help you. The CMA have the authority to tell you, you are on your own now. 45 seconds if you can.
Okay, so I think CMA have dropped the ball on this one. I think what any regulator in any market needs to be on toes at who's playing in the market.
Yes.
So I think CMA cannot pass the ball to someone else on this one. They need to be more proactive as far as market analysis is concerned. So I think where the market is and where the investors are, I think CMA owes them in trying as much as possible to close on these queries which keep on popping from time to time.
Pretty much. All right, Gabriel, 45 seconds as well. Clear. Somebody listening this morning, you want to put your money somewhere. What are those let me talk about two only. The things that you should look at first before you put your money into a fund.
One, just find out if which bodies they report to.
Yes.
And where they are regulated or not. Two, just understand the products they invest in. And my recommendation is stick to the very simple money market funds and the more sizable ones. Those are the basic starting points that I would recommend for anyone.
Pretty much.
We have sizable money market funds.
Yes.
They report their performance on the business daily, every day. You can see the returns there every single day. You can see the yields, you can see what they're paying. Simple as that. And then engage a financial advisor. Just call up someone, go online, just search. There's so many, Mwango Capital, there's Market Cap Analyst, there's Abojani, there's so many. Just talk to one of them.
Pretty much. All right. What investment should I be what return on investment in terms of percentage that I should be looking at?
10, in the range of 10.
In
10
the range of
plus
10.
or minus 1 or 2.
Yes.
In the range of 10.
Pretty much.
In the range of 10. That's what we see in the market. Yeah.
Pretty much. Now, if you didn't listen to Gabriel and Arnold, then don't cry, because CMA is saying that for those unregulated money market funds in the country, you are on your own. But they're saying you can report, but when it comes to what you do after that, you are on your own. But you don't have to be on your own, because that's why exactly Gabriel and Arnold were in the studio this morning to tell you exactly the things you should be checking before you get your money into any fund. Check them online at Metropole TVKE across all your social media platforms. I am Adkia Gesimba. This has been Economic Review. Good morning.